by the end of next year, I think would be selling humanoid robots to the public. That's when we are confident that it's very high reliability, very high safety, and the range of functionality is also very high. You can basically ask it to do anything you'd like.
Wrong one. There we go. What? Who is this imposter over here? Who is this imposter taking up my spot? You know what? I probably had it open to the other computer. My bad. Welcome to a new episode of the Solid Report. You know, one thing I don't like is when the market is ripping and right before I come online, the SP 500 in the market like has a little bit of a pullback here. Like, not cool. Not cool, stock market. Why you got to do that to me? I don't know why you got to do that to me, but it's all good. It's all good. I mean, we were in a much worse place yesterday, and here we are today. BM&R basically is just flat in the day. Like, I don't know. Crypto just can't catch a break. Whatever, it's all good. What's going on, Mosh? Alfie? Midwest. Always a pleasure to have you, Mr. Midwest. Appreciate you. Welcome to the Solid Report. We got a little bit to go over today. Started a little bit later than usual, but I mean, a lot of you people out there are pretty happy about this nice 5.5% move on here. But why? Why is Meta up 5.5%? We're going to get a little bit into that one. We're going to get a little bit into another AppLovin show report. This one comes from an author of a Substack, and quite a few of you people have heard about this. Heard about this person before. She loves to short a lot of stocks. So we're going to look into that Substack article, which is publicly available, which allows me the opportunity to put it on here, and I'll provide my thoughts on it. We're going to watch the Elon Musk part of the Davos speech that he had at the World Economic Forum. I'm going to look a little bit into that one. Also, a post that I made yesterday, and the stock is up. Lemonade is up about 13% today after a big move yesterday as well. Going to share some information on that one. And last, we're going to touch a little bit on the cybersecurity sector. George Kurtz, CEO of CrowdStrike, had a little bit of an interview during the World Economic Forum. We're going to watch that one. I'm going to give my thoughts about Rubrik as well. Rubrik is here trading below its pre-earnings level, below all the moving averages, but might be quite a bit of an opportunity for people who with a long-term time frame. But let us get on with the show. Nice to have you here, Revintern. Masha, I believe I already said hi to you. Midwest is always sticking around. Appreciate you as well. All right. So before we get started, just want to do a little bit of housekeeping. Everyone on the Sam Badawi channel, the Sam Solid channel, the Solid Finance channel, going to be turning off the stream pretty early today. So go ahead and make your way to the Wolf_Financial YouTube channel, and I will provide the link in the comments to the YouTube video where you can just jump right over there, subscribe, turn on notifications, hit the like button. But man, I hate, why does Notion always do that all the time? Come on, Notion. Why you got to do that to me? Why you got to put all those embedded links in there? Anyways, that is the link on there. You can go ahead and watch this video live on the Wolf_Financial YouTube channel. For the other 6 people who just tuned into the Sam Solid channel, again, please tune into the Wolf_Financial channel while I'll be streaming the rest of the stream on the Wolf Financial stream. That's right. And if you're on X, hey, why not head over to the YouTube channel as well? All right, let's get on with the show. The stream is cut off on the Sam Solid channel, so appreciate everyone for heading over to the Wolf_Financial channel. Let's get on with the show, guys. All right, so we have obviously an up market today. Did not look as up as overnight or pre-market, but I digress. It still is a pretty good market today. But in case you were not aware, yesterday basically Trump came out, and actually I'll just go ahead and share the tweet over here. I did share it in yesterday's show, so you can go ahead and check out yesterday's show when it was like midstream when the market was just like seriously popping. While Duolingo is at $155, man, that thing cannot catch a break. Let me just pull up the tweet right here for you all. And hold on. Oh, I got to go pretty far back here. Man, this dude posts a lot on Twitter. Man, he must be posting some crazy content out there. All right, here we go. So I'm going to share this one. All right. So as you all know, the market basically ripped right after this news came out. It went from like red to very green yesterday. But for the most part, Trump met with NATO and formed a framework deal on not just to buy Greenland or parts of Greenland, but the entire Arctic region, which was very big news. But I think the biggest news was that the tariffs would not go into effect on February 1st, which is going to be for Europe. I believe that was a 15% blanket tariff on most goods in Europe. And now we're not going to have that tariff war that everyone thought was going to be the tariff tantrum 2.0. So therefore, Taco Wednesday was back. I did not eat Taco Bell yesterday. I should have in commemoration of a very green day. Probably not going to eat it tonight. I kind of feel a little bit sushi, so I don't know if I'm going to be eating tacos tonight. But by golly, guys, the market is up a very big amount in the last couple of days. Completely different from what everyone thought was the world's going to crash. It was going to be the top of the market, whatever it is. But things are looking pretty good today. I mean, let's take a look at lay markets. All right. Should I call it lay markets? I don't know. I'm just going to call it lay markets. All right. So like I mentioned before, Bitcoin just cannot get back above 90K. And arguably, I you know, there's always that like catch-up trade that people do a lot. And I don't know if I would do a catch-up trade in Bitcoin. This has been materially weak since October 10, when we had that China tariff argument. It is just catapulted down since October highs. But I mean, it could come back, but I'm not. Oh, wow. Why does it say the CEO of Wolf? That is definitely not true. Hold on. Let me correct that real quick. Let me correct that. I am definitely not the CEO of Wolf. That is Sir Gav Blacksburg. Definitely not me. And I'm going to change it right there. There you go. You're welcome. So anyways, just look at this chart. This looks, dude, what is happening here? Today is not my day. It is everything's disappearing. Things are breaking. I'm calling myself the CEO of Wolf. What is happening here? Let me just go ahead and share that screen once again for you all. All right. So we have just the massive downtrend. I mean, arguably, like people are like, oh, well, maybe it's finding a base over here. I mean, it could be, but it's just, I can't help but to see this. Where's my, no, I don't want that line. I just want to draw. Okay, so if I do this right here, right, then I do this right there, and I make both of these wingbats red. All right, I guess I'll make that. No, red doesn't. Anyways, it's looking like a bear flag here. I mean, I don't really believe in these weird chart patterns. Like some of them play out. Supposedly, it is a higher probability ratio that it is going to make another move down. I don't really do bear flags. I do more the moving averages. You guys can go ahead and check out yesterday's video where I kind of did like basic TA for moving averages and simple moving averages. But if we do look at them on the daily, right, like we're below the 50-day moving average today, and we can't seem to get above it today. This looks pretty bearish, right? We could probably come back up, maybe, but I mean, the market's at all-time highs. And especially RSP is at all-time highs. I believe it's going to have a new closing all-time high today. And Bitcoin is just 30% down from its highs. I mean, it's like, which one would you buy? I don't think I would buy Bitcoin, to be completely honest. I would probably continue to buy stocks that are doing very well, that are part of a massive secular trend and so on. But yeah, no, thank you for letting us know about this one. Yeah, that crypto bill basically got pushed back. They are going to vote on it, but there's a lot more to that. Actually, there is there is a guest that I did want to bring onto the show. Not today, but we're going to bring the guest on the show probably next week, who is a bit more of a Bitcoin expert than I am. In fact, I'm not even close to a Bitcoin expert. I'm more of a HODL scenario, but he could probably provide a lot of clarity as far as like, what's happening in crypto, what are the politics and the fiscal policies behind it, what are some bills that are about to be passed that's going to actually impact the entire industry. I mean, I do remain bullish Bitcoin long term. But I cannot be bullish at short term. But, while at the same time, people could have different time horizons of that, and people could be more of a long-term player on this thing. So, I bid you good luck if that's really the case. And I bid myself good luck because a part of my portfolio is in Bitcoin. But I mean, as far as the short term goes, it is not looking good for me. And same thing for BMNR. I mean, like, you're not going to have an up move in BMNR unless Ethereum goes back up. And Ethereum, of course, is the same nasty setup as Bitcoin. So I'm going to stay away. But Lemonade is doing pretty good. It's not a new all-time high, but it is a 50-week high courtesy of Brad Friedman, stock market nerd, called that one out. So kudos, Brad, and kudos to everyone who's been long Lemonade since the 20s right here on the pivot low. But even if you bought it at its most recent high at $50, you're still sitting on a double there. So, conviction really matters, and holding time really matters as well. I didn't think Lemonade would be at $100 or close to $100 today. I thought that would be at least 2028, but so be it. The market has its ways of making some crazy moves to the upside, but definitely enjoying that. We'll dig a little bit into the reason why that's happening. Oh man, Path is about $15. I already said it public here. I stopped myself out of Path yesterday, but of course, you stop yourself out of something, it makes that dramatic move back. It is what it is, guys. You're never going to catch everything, but there are a few things on the table that are doing really well today. Novo Nordisk, I was calling this one out yesterday. This one's up about 5%. So congratulations if you did buy some Novo Nordisk yesterday. That was actually a very interesting setup that it had over here. It had that textbook back test of the 200-day moving average. I mean, this is probably like one of the best setups that I love, is when you have that massive downtrend and you want to you don't need to catch the bottom, but you need to be able to identify where the bottom is and basically go long when it has a good setup. And one of my favorite setups is when you recapture the 50-day, you recapture basically all the moving averages are below the 200-day moving average still. But when you get this breakout of the 200-day moving average with, of course, do we have good volume on it? Okay, we had decent volume on this breakout, not the best volume, but decent volume. And we came back to back test it, and it couldn't close below the 200-day moving average. You had that textbook setup where the next day, here we are up 5%. It doesn't happen all the time, but it is a pretty good probability ratio, and that is the bull case I have for Novo Nordisk, and I'm sitting pretty nice in that one. I think I'm roughly above break even here because my timing on buying it was not the best. But can't really complain. Novo Nordisk is doing pretty good today. If you bought it yesterday, like I said in yesterday's stream, congratulations. Obviously, this is not financial advice. This is just a dude talking on YouTube stream, courtesy of Wolf Financial, just saying what I think. And, I will be right. Hopefully I'm right more times than not, but my goal is to make more money when I'm right versus how much I'm going to lose when I'm wrong. And I've been wrong. I've been wrong many times, but I've certainly lost a lot less when I'm wrong and made a lot more when I'm right. And that's the name of the game, guys. It's not to be right every time. It is to make more money when you're right and lose less money when you lose. So that way, over the period of time, you're making money, right? And if you're not doing that, you might need to rethink your strategy. So let's get into it. All right, big news for this morning. I don't know if it's like even, I don't think the market really cares about it anymore. We had that 10% cap that we were supposed to put in the APR rates courtesy of Donald Trump starting in January 20, and I don't think that's actually happened yet. But Donald Trump is he's suing JP Morgan for $5 billion. Let's look a little bit into it and see what's going on as to what this is all about right here.
President Trump has filed a lawsuit against J.P. Morgan Chase and Jamie Dimon personally over allegations of debanking of Trump-related bank accounts during the period of time that the president was out of office. This is a suit for as much as $5 billion filed by the president of the United States and a number of Trump entities against J.P. Morgan and Jamie Dimon as an individual. And we have a statement here from J.P. Morgan just within the past couple of seconds. They say, while we regret President Trump has sued us, we believe the suit has no merit. We respect the president's right to sue us and our right to defend ourselves. That's what courts are for. JP Morgan Chase does not close accounts for political or religious reasons. We do close accounts because they create legal or regulatory risk for the company. We regret having to do so, but often rules and regulatory expectations lead us to do so. We have been asking both this administration and prior administrations to change the rules and regulations that put us in this position, and we support the administration's efforts to prevent the weaponization of the banking sector. That's an on-the-record comment from JP Morgan spokesperson Trish Wexler, Scott. So this lawsuit is a 56-page document. We're going through it right now. The gist of the argument is that this debanking was improper and due to political reasons. That's what the president says in the filing. And we saw, Scott, Jamie Dimon, very outspoken in Davos, being one of the few CEOs to go public with criticism of the president over the immigration enforcement issue, criticism of the enforcement operation more broadly. And so this is a flashpoint of tension now.
Right. I think that's enough of that one. It's very clear that they're not in agreement here. And as Midwest said, FAFO, JP Morgan, I'm not going to say out loud exactly what FAFO means, but I mean, go ahead and look it up. The more you FA, the more you find out. Okay. And we have historical evidence of this being true. We have very great charts and studies of what happens when you FAFO. And, you know, I personally would not fight this. Mind you, this is not, I don't think this is going to turn into anything much. I mean, you have the president of the most powerful country in the entire world versus the CEO of the largest bank in the entire world. Like, no one's going to lose this argument. Okay. And this has everything to do with the 10% cap and rates. Like I don't think this has anything to do with closing the accounts. This has nothing to do with the immigration policies. In my opinion, I don't think it does. I think it has everything to do with the APR rates, because if Trump comes in there and he lowers those APR rates at 10% or caps them at 10% for a year, the people who are issuing the credit, which is JP Morgan, they're going to suffer. They're going to suffer in their margins. It's going to hit their bottom line. And obviously the CEO of JP Morgan, it's not going to like that. And I'll tell you something. I don't think, oh, here we go. This is what I was looking for. All right. I'll share this tab. All right. Yeah. So I'm not going to say it, but as you can see over here on the x-axis, you have F around, and the increasing amount of effing around versus the increasing amount of finding out goes up. It's a linear graph to the upside, right? I would not long this chart because I'm not in the mode of trying to F around. I'm in the mode of trying to make money. So in this case, I don't think that Mr. Jamie Dimon is looking to F around. I think this is going to benefit both of them. They're going to come to some sort of deal, and JP Morgan's going to be back at all-time highs. Like it's just how this game is going to work. I'm not long any banks, but they've been doing pretty well for the last few months. But you know, clearly, I mean, you know, it's on his radar. And when someone is on Trump's target, you know, he's going to go for it head on. That seems to be the case. And, you know, I think maybe the market took a little bit of a breather from the capped 10% APR rates. But I think now it's probably the time to go back to it. And the market's going to, of course, revisit that, and we'll see how it affects the entire financial markets. But I'll be completely honest with you. I don't think the market really cares about it right now. I think we're still in Taco Wednesday. And I think that, let's see here. Let's actually look to see where JPM is trading at. I think we're still in Taco Tuesday mode, Taco Wednesday mode. Apologies. Oh, wow. That's actually not that great of a chart. Interesting. I mean, we've seen this recover before, but every time, see, I'm not someone who's like, ooh, bear flag, this is definitely going to go down, or it's like head and shoulders and all this stuff, right? I'm looking at trends, and I'm looking at historical price action, right? If I'm looking at this JPM chart over here, it's below the 100-day moving average, right? But every time it did, it always got bought up. So it'll be interesting to see. And it hasn't actually stayed below the 100-day moving average since last April. But before that, It's always recover the 100-day moving average. Always recover that. That's actually pretty interesting. I'll tell you, sir, I might be interested in this one now that I think about it. This would be very interesting. You know what? Let's do a little bit of investigating here. NASDAQ. I want to take a look at something here real quick. I'm going to share the entire screen so that way I have to keep on switching around. All right, so right now I'm going to pull up the options chain for JP Morgan. All right, let's pull up the options chain. Let's look at the calls. If I were to do something like this, I'd probably want to go for March at least. March 2020 monthly, March 20 monthlies. Right now it's trading at about 303. So these are expensive for JP Morgan calls. But yeah, that implied volatility is probably a little high right now too. Anyways, if you're to go for the 320 calls and it somehow made it move up tomorrow or when I anticipate them making this deal, which is just going to be inevitable at this point. I don't think they're not going to make a deal. It's possible that might move up 5-6%. And that would be double for those options. Interesting. No, I'm not going to do it though. It's not my game. I don't want to speculate. I would rather have some background information, some stuff. And I don't know, besides the fact that it's JP Morgan, like I don't know anything else about it. I don't know anything about its financials, haven't studied it, anything in the secular trends. I don't know, it could probably go up, but we'll see. But that would be pretty interesting just to, let's remind ourselves to check in on JP Morgan to see if that is in fact higher in a couple weeks. And I'll call it. All right. JP Morgan's going to be trading higher in a couple weeks as long as the market stays bullish. If the market's not bullish, all bets are off. I can't guess where the market's going to be, but seeing the pattern here, Trump targeted Elon, Tesla dropped down, and they became best friends again, or they became friends again, or acquaintances, and now Tesla's near all-time highs. Same thing's probably going to happen with JP Morgan. I mean, like, why would you fight the largest bank in the entire world unless you're planning something? Let's not forget, just the other day, Trump targeted Lockheed Martin and a bunch of defense companies, saying they can't do any more dividends or buybacks. And look where it is now. It's at $600, near all-time highs. Crazy. Just like, I still remember this tweet. I haven't had it here. I was on the show with you guys. Down 8%. And look at it now. Man, the market does this all the time. It does it all the time, guys. It doesn't stop doing this. It always sets up these cases to go up. Look at this. Lockheed Martin is up 20% in just the last 2 weeks. 20%. Lockheed Martin. Please tell me, like, that never happens. Lockheed Martin doesn't make crazy moves that often. Okay, fine. It did. It did a couple years ago. I take it back. It happened a couple years ago. But it doesn't happen often, man. And Sir Donald Trump is giving you these opportunities to jump in these cases. Let's look at critical metals, CRML. Keep on saying caramel, CRML. Just call it caramel. I'll call it caramel. I mean, look at this move. Look at this move, right? And I had the setup yesterday. And even after they announced the Greenland deal, Critical Materials has massive mines in Greenland. The market set you up yesterday. Now it's up 26%. I don't know. That was a politically driven setup. Man-made. Here we are today. It's man-made. So, just wanted to, the market does this all the time. And it's so blatantly obvious after the fact. But if you find it before it happens, you will do really well. Stock Talk called this one out today. Look at this. Pangea. It's up 17% today. Mind you, it's a, $500 million company, and people rush into it to door, but this thing is probably going to be a lot higher later on because this has a lot of exposure to Greenland, right? So you tell me, guys. You tell me. The market is kind of telling you something. I do wonder, Of course, you cannot have a green day without SanDisk being green. I guess it doesn't have to be double digits, but it certainly was not green earlier, and now it's green. And of course, Micron has to be green as well. Whoa, what happened to Navitas? Wow, that's up 12%. That's amazing. I wonder why that's up 12%. Anyways, guys, Indie Semiconductor is actually almost at $5. That's pretty cool. All right, guys, so let's move on with the show. So Meta. Why is Meta up 5%? So there is actually, did I not save anything? I did not save anything. All right, so let's go back to the Meta chart over here. Why is it at 5%? Meta is trading above the 20-day and the 50-day moving average. This was like the setup that I was just pointing out to you with Novo Nordisk. Not the same exact setup, but a very similar setup. You have a stock that's basically been in a downtrend, trading below all the moving averages, and then it recovers a couple of the moving averages like you did over here. And it kind of goes around here and then makes the move back up. Oh, shoot. Wow. Did that just happen? Oh, there must have been news. Yeah, no one's definitely faithful in GitLab right now. All right, let's see. Let's see it. Is an acquisition? Anthropic eyeing a buyout? No way. No way. No way. If that's true, that would be nuts. Man, I figured that a company was going to buy GitLab, but I didn't think it was going to be Anthropic. That came out of left field. But I mean, this chart just looks terrible. You'd have to like really nail it on the head to be able to make that one. The volume's not that high, and we're going to close in 30 minutes. So I don't know. Maybe there's some validity to it, but we've been tricked on this many times before, and I don't know. I'm not buying it. I'm not going to buy GitLab. I stopped myself out of this thing at $48. I should have stopped myself out of it earlier. I think like right here, I stopped myself out, thankfully, or I think it was like right around here. But yeah, this thing just went downhill since then. So, I mean, it could come back, and this is like one of those things where like, I'm super bullish on GitLab, but like, I can't buy this chart. Like it's terrible, right? Like this is a terrible chart. And a cost basis actually would have went nearly red if I held it, right? So the difference between like having a good cost basis and being able to stomach these downfalls, like Stock Talk says a lot, having a low cost basis like really matters. Like for example, Rubric, I'll get a little bit into this one later on. This is just a nasty chart, right? But I bought it down here at like around these levels, right? So even if it's here at $64 and down from 100, I'm still a double on it, right? So it's like, I mean, to be honest, like the bigger the other positions get in the portfolio, the smaller this one gets. So at this point, like it's not enough damage to sell it and put into something else. But I just want to hold on to it just to see what happens. But the rest of the portfolio is doing pretty good. So I'm not really going to tamper with that one. Not really going to swing it either. I haven't really added this position in a while. I did like a small nibble, like around $85 after the earnings, but like I didn't think this was going to happen. Like I didn't think it was going to come back down after the earnings. We'll get a little bit more into that later on. Can I have Stock Talk as a guest sometime? You know what? To be honest, I would like to actually do that. Thank you for the idea. I was actually thinking about doing that lately, but dude, this guy's freaking killing it. Like this guy is freaking killing it. News on Meta. So okay, go back to Meta. Wow, I'm like have ADD this morning, man. No offense to anyone ADD, but just like using it as a term, like my mind is like everywhere this morning. All right, so I didn't post about it this morning, but I did read a post about it, and I did confirm that it's actually true. So Meta is planning on. Oh wow, that's from Robinhood. So basically, Jeffries came out with like an upgrade, a massive upgrade report, basically saying that you need to buy the dip in Meta. So these analyst shops or these sell side shops, they have a lot of clients who follow their work, right? Who basically follow the moves that they suggest. Like big money follows what they suggest. There was, I thought I saw someone. I think it was this one. Meta and Facebook parent company Threads is starting to surpass 400 million monthly active users, and data suggests that the platform has gained more daily active users globally than Elon Musk's X. Ooh, what a jab. Wall Street expects Threads to become a significant revenue ad driver for Meta. All right, so they are likely going to turn on the advertising engine on Threads, right? And that's more money for its ecosystem. We've already seen Meta's margins. All right, so let me pull up Meta. Consensus Guru has a really good chart about that one. Hold on. I'm just trying to pull up that chart that he has. It's a really good chart to show you the margins of Meta. No, it's not the most recent one. Here it is. All right, let me share this one. Shout out to Consensus Gurus. I'll put that in the chat in case you guys want to check that out. All right, so this is the snapshot from wait, is this last quarter? That's Q1. No, dude. No. Maybe he didn't have it. Apologies, guys. We're having some technical difficulties here with the host. He's not pulling up the right content. All right. Fiscal AI. Yeah, Fiscal AI it is. Fiscal AI. Can't mean to say anything bad about you, but I should have went to you first. I apologize, Fiscal AI. All right, so Meta's gross margins over here. It has gross margins 82%. I mean, this is an ad company. This is a mega cap company, right? But it is software based. Software companies tend to have highest gross margins because the more they scale out, the lower the costs are. So they have gross margins of 82%, but arguably they have operating margins at 40%. So for every dollar they make in their top line, 40 cents of that goes to operating profit, right? That's a lot for this company. And especially since they're still hovering above 40%. Now, this right here is probably the reason why it stayed stagnant for a little bit. Like what I was saying yesterday when it comes to digging into some of these companies, is that when you have profitability decreasing, all right, even though their revenue did increase, I believe their guide was a bit lower. But when you have profitability decreasing and the spending is going up, investors are seeing profitability contracting. And when that happens, they don't like it. They sell the stock. And this has basically been happening since the other quarter, right? Meta has basically hit its all-time highs like a couple of quarters ago. It hasn't really revisited since then. So seeing the news that you saw that they were going to be cutting 30% of the costs from Reality Labs, which is arguably one of the largest spending besides AI for Meta. And now they're going to turn on ads for Threads, which is a big moneymaker. Hey, they might swing back into profitability mode and come back around 40% operating margins. And if they do, the stock's going to be a lot higher. It's going to be at all-time highs if it does. I do own Meta. It's not a massive position, but I'm holding for the long term. I think this company, I think the stock's going to see like around $1,000 in the next couple of years. If the market stays bullish, it's probably going to be a lot sooner than that. But I definitely think it's going to have a comeback. I mean, look at the sentiment today. Like it's up like 5%. Meta's up 5% today. All the market's kind of pulling back a little bit here. Not cool, Mr. Market. Not cool. But Meta is here at 644. So that's kind of the story. The reason why it's up. I mean, also on top of that, like look at the chart. This has been a pretty bearish chart for a while, and it can have these massive upswings. So I would still I don't want some confirmation here, because if we close below back this 20-day moving average, I don't know. This might be a dead cat bounce, which would say that, you're going to have a lot of people buying into this on low volume, and then it's going to come back down tomorrow, or it's not going to come back and you're going to end up being a crazy bag holder. So I would kind of be careful if I'm sharing the wrong screen, aren't I? Meant to share this one. I'll kind of be careful a little bit trying to chase this with a trade. I mean, if you're holding long-term, for me, like long-term, like I was adding in the 600s, low 600s, and I added at 650 like a moron. But, I'm just going to hold on to it. 3% position. I think it's actually less now because the other positions got bigger. But yeah, I'm just gonna hold on to this one. I'm bullish beta for sure. Bullish beta. I mean, I'm really bullish Amazon, but like Jeff Bezos just does not give us the time of day for this thing. Like the dude doesn't stop selling. So you know, I mean, there's that. Jeff Bezos birthday. Where is that video? Oh, actually, speaking of Jeff Bezos, he said something this morning that I found pretty funny. Right here. Jeff Bezos advises aspiring Gen Z entrepreneurs to start at a real world jobs. Dude, why does the screen keep disappearing? Here we go. Jeff Bezos advises aspiring Gen Z entrepreneurs to start at a real world job like McDonald's or Palantir before starting business. A real world job like McDonald's or Palantir before starting a business. So I said, well, so then that means that there's only two places you need to submit applications for straight out of high school. So if you want to pay for college on your own, there's something you need to do. You just need to apply to McDonald's or Palantir. One of them's a walk-on. Guess which one? No one has told me which one. Yeah, so no one has actually guessed which one the walk-on is. People are just commenting like, no one guessed what it was. Okay, so like, which one's the walk-on? Anyways, I digress, but that's a bad joke. But why is he saying this? Like, is this a joke? Like, is he trolling at everyone? A real world job. Basically saying like, you know, a job to like really understand how things are going. McDonald's or Palantir. It's like McDonald's or Palantir. I don't know. I just thought that was pretty crazy. I would say something like that. Anyways, the dude is like definitely selling stock. Like he is selling stock left and right. I don't know if he's doing that as much anymore, but the dude likes to unload a lot of shares when price gets a bit high. And apparently his wife started doing it recently too. And, you know, rightfully so. I mean, he's obviously owns a large amount of the company and it's his only means of actually making money by selling stock. So like, why not? You know, I'm not going to argue against that. Like the dude made a lot of people a lot of money. He made me a lot of money. So I'm not going to argue with that. But I just, you know, I don't understand. I don't understand. I don't understand. And I don't need to understand why. Like, I'm not sitting here like, give me an answer. Why isn't Amazon going to $300? Like, I'm not going to sit here and like be upset about it. Like, it is what it is. The market is always right all the time. So if it's not at $300, it is what it is. It's in shares. I don't think I'll ever sell Amazon. Maybe trim at some point, but it is definitely not right now. I think this is going to be a $300 stock probably in like at least a year or two. What's going on, Jose? Man, yeah, I bet you're pretty excited about that Intel. The Intel earnings that are happening. Let me know if you want to come on, man. I'll send you an invite link. I want to hear your thoughts about Intel and all this crazy stuff that's happening in Davos. Let me know if actually I'll send you over a link in case you'd like to join. Let me send it over to my man Jose Naranjo. I'll also post his profile here. I mean, you guys got to follow him. Here it is. One of the few people on Twitter where their name is actually their handle on Twitter. Because some people like myself, my name is not my handle, it's my alias. So people have a hard time finding me when they see my name all the time here. Anyways, let me know if you want to join up, man. Hit me up. It's always open. What was I doing? All right. So let's continue with the show. The screen just does not want to share. Not giving me easy time today, and it's all good. It's all good. With the little one right now, just on the phone, support and listen. Oh, dude, congratulations. I didn't know you had a kid. That is not easy business. Kudos. Shout out to all the dads out there and all the moms out there. Shout out to all you guys. And shout out to everyone else too. Shout out to you all, but mostly shout out to the 94 people here sitting on YouTube. Thank you. And if you're on Twitter, go ahead to youtube.com/@wolffinancial to watch the show and to comment below as well. All right. So let's move on with the show. We already talked about Meta. AppLovin, that's right. The AppLovin short report. You know, it's actually pretty interesting. And I'm going to pull up this chart real quick. AppLovin is only down 2%. Like the Wall Street really loves this stock, right? They really love this stock and they're not going to let it go down anymore. But we're getting pretty close to 200-day moving average. I think the last time I was here when I saw this guy bought up, I was like, oh, well, Wall Street doesn't want to sell off the stock on probably the first short report we haven't had in like a year on AppLovin. The thing is pretty expensive. Like, this is not a cheap stock. It trades pretty expensive. Arguably, TTD is still an expensive stock even after its massive drawdown, but AppLovin is just growing at 70%, around 70% operating adjusted EBITDA margins. I mean, this is a phenomenal company, and they have the massive tailwind. They have the massive tailwind of being advertising, right? But the problem is that people want the stock to go down. So I've mentioned this before with short reports, is that they short the stock, then they release a short report, and it's very likely they cover their short after that. Not all of them do, but they don't have to tell you whether they actually do or not. They just say they might, right? So like, they're not like some big hedge fund where they have to submit all of their moves and everything in 13Fs, or even like they have to submit it like the same day, whatever it is, because they're a massive insider or a massive shareholder. Like, they don't have to do that, right? So they could have shorted the stock already, but we did get another short report today that it's not as big as Money Waters, but this lady has a history of successfully shorting stocks. So I would not discount it. But I struggle my blah, 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 blah. Okay, I'll put this over here in case you guys want to check it out. Lauren Bollock. Okay, I'm going to skip over a lot of this. The report is the filthiest thing I've ever published. If you know how to read it, Main Street. Okay, this doesn't really mean anything. Okay, this is not the short report that I thought I was going to see. I think she actually put it out before that. You know, I can't exactly find it, but AppLovin did come back to the short report that came out the other day from Capital Watch. And they basically said that it's rife with false and misleading, nonsensical allegation. The allegation was that that AppLovin was tied to money laundering in Southeast Asia, like billions of dollars. And the person that's a large shareholder of AppLovin was in cahoots with everything, right? So I think those were the allegations that came from it. And the stock was basically, the dip was bought up, but it looks like it's curling back down over here in the chart. And I've owned AppLovin before, and I've gotten out already. I'm not looking to get back in or buy this dip because I don't think that the upside on the near term is asymmetric. I think it's going to take a little bit of basing out over here. But right now, these are like very high pressure sells here, right? This is not crazy volume, but this volume is like a little bit more than average in these sells. So I would wait to let the dust settle a little bit. Is this like a generational opportunity? Now your generational opportunity with this was down here. This is like maybe like a swing trade or something if you want to, with the stop at the 200-day moving average. But I'm not looking to get into any AppLovin or anything. But I mean, it is a phenomenal company. I went over those metrics the other day and posted a little bit about that one. So you can go ahead and check that one out if you'd like to. Yeah, way different. $200 AppLovin is way different from $520 AppLovin. So anyways, there actually was Elon Musk. I played in the beginning when the show first started. He appeared at the World Economic Forum. He had a little bit of a speech, and I'm actually going to play part of that speech right now, courtesy of CNBC. And we'll listen to what he has to say specifically about robotics, and we'll get a little bit into Lemonade as well right after.
I mean, the way to think of it is that if you have a large number of humanoid robots, the economic output is the average productivity per robot times the number of robots.
Right.
And actually, my prediction is in the benign scenario of the future that the robots will actually make so many robots in AI that they will actually saturate all human needs. Meaning you won't be able to even think of something to ask the robot for at a certain point. Like there will be such an abundance of goods and services because My prediction is there'll be more robots than people. So,
but how do you then have human purpose in that scenario?
yeah, I mean, nothing's perfect, but it is a necessary. Like, you can't have both. You can't have work that has to be done and amazing abundance for all. Because if it's work that has to be done, then you and only some people can do it, then you can't have abundance.
Then it's narrow.
It's narrow, yeah. Exactly. So, but if you have billions of humanoid robots, and I think there will be, I think everyone on Earth is going to have one and going to want one, because who wouldn't want a robot to, assuming it's very safe, watch over your kids, take care of your pet. If you have elderly parents, a lot of friends of mine have said they have elderly parents. It's very difficult to take care of them.
Expensive.
Yeah, it's expensive, and there just aren't enough people to take care of there aren't enough young people to take care of the old people.
Right.
So if you had a robot that could take care of and protect an elderly parent, I think that would be great. That would be an amazing thing to have. I think we will have those things. So, overall, I'm very optimistic about the future. I think we're headed for a future of amazing abundance, which is very cool. And definitely, we are in the most interesting time in history.
Okay, that would be crazy if they start selling robots before the end of the year. So two things happened with Elon Musk in the last couple of days that he announced on Twitter. The first thing that happened, of course, I'm trying to look for it. I can't seem to find it. Here it is. Oh, no, that's not it. Hold on. Here it is. All right, so let me share this screen. So yesterday, Lemonade was up because Lemonade came out and they said Lemonade is an auto insurance that utilizes AI to basically calculate all of its models and everything. They also have an embedded AI. I think it's called Maya that communicates with a lot of people. Something that you'd see with Rufus or whatever with Amazon, whatever it is. But they were able to reduce costs, and they're one of the first people to actually do this in the insurance industry. But they went ahead and they partnered with Tesla, and they said that anyone who uses FSD in their Tesla while they have their insurance thing plugged in per mile will see a 50% reduction rate. And it's mostly due with reduced accidents, right? And Elon Musk basically pinned this to his profile on Twitter. Let's actually see if it's still on there. Ah, he took it out. Okay, well, it was there for a while, but I think if you scroll that, this guy's posting a lot now. Elon Musk is posting a lot on Twitter lately. Like, I got to go pretty far back to see something. But anyways, he had this pinned up there for a while, and it was essentially free advertising. I mean, Elon Musk has like 5 million plus. Actually, I think it's like 40 million people following on Twitter, and obviously, the richest man in the entire world. People listen to what he has to say. I mean, we're on here listening to what he has to say as well. There's obviously a motive for Lemonade to come out here and partner with Tesla because it gives them good publicity, but also there's a lot of younger drivers out there who own Tesla. And if Lemonade can penetrate that audience and take them away from, or steal those businesses away from all the legacy insurers when it comes to auto insurance, like Geico, Allstate, and all those other companies, that's a lot of leeway for Lemonade. But I mean, Lemonade, like I posted over here, it's gone a long way. Like, this company has really gone a long way since just a year ago, right? No, not even a year ago. That's less than a year ago. That's like 8 months ago, right? I remember when they posted their earnings, and the thing was actually, no, this wasn't after the earnings. Was it after the earnings? So I remember they posted their earnings the morning of. And that's right. Yeah. So they posted the earnings the morning of, and they provided good guidance. Like, the stock did pretty decent. And it wasn't too long after that where it was up another 30% after the next earnings, right? So this was like a pretty attractive opportunity. And at the time, they were not profitable. And if I actually haven't checked their fundamentals in a little bit, or the financials in a little bit, but like I think they're on the brink of profitability. But this is obviously in-force premium is basically like your annual recurring revenue or your RPO. The RPO when it comes to software, it's like you're taking the amount of premium that your customers pay today, and you're basically you're annualizing that. Actually, hold on, what is it? Okay, so it's the amount of premium your customers pay today, and you're annualizing that, and that's going to be your in-force premium that's expected to happen within a year, right? That's going to become your revenue as long as you keep your current insurers. And it's obviously going to be higher than their revenue, because the revenue is how much money they already billed today, right? So the revenue is like around $600 million or something. I'm just annualizing this figure over here. And their force premium is at $1 billion, right? So they broke the $1 billion on the in-force premium, their forward guide metric, arguably their forward guide metric with Lemonade. And on top of that, I didn't put it over here. They're heading toward free cash. This was a year ago, so I think they already are free cash flow positive, but I didn't put it here. I think it's their gross loss ratio. The gross loss ratio is basically, you want to keep that figure as low as possible, because it's how much money that when you insure your customers. Hold on a second. I actually had it. I forgot where I put it, but the gross loss ratio is, I think it's around 72%. And that's considerably low compared to all the legacy insurers, because that's basically how much money you're able to collect from your insurance if your customers don't file a policy, right? So your insurance is what it is, right? So you pay the company to insure your vehicle, so that way if you get into an accident, then the company pays you, right, for all your damage and stuff. It's an insurance policy. And if you, let's say you're a great driver and you don't get into an accident in a year, all that premium you paid for Lemonade goes to its top line, right? Maybe the fees and whatever it is, but that's how Lemonade makes money. That's how insurance companies make money, because they want to insure people who are not high risk. And if you are high risk, or if you get into a lot of accidents, or you have tickets, whatever it is, these insurance companies charge you more for premium to make up for that in case you do get into an accident if they're not underwater. And if that gross loss ratio is lower, that means that they're not losing as much money compared to the amount of policies that people own claims on, open claims on, right? And that means that they're hiring good drivers, but also because of the fact that their algorithm is able to decide how much premium to charge the customer if they are high risk of getting into an accident. And that was the whole point of the thesis with Lemonade, was that they're able to do this a lot better than other companies. And that in itself is the reason why the company is doing really well as it is today, because they're getting a lot of people to sign up for them. And on top of that, they're increasing their profitability. And like I've mentioned yesterday, like I've mentioned many, many times on these streams, is that the more you grow your company in terms of revenue, and the more you get into profitability, that acceleration or the rate of growth is what you need to look at with companies. If there's an estimate for the bottom line or the top line for a company, and they beat that estimate, and then they guide for more than the forward estimates, the stock is going to go higher. That usually happens about 90% of the time. And that's what Lemonade has been doing for quite some time. And that's the reason why the stock is basically a triple since this post. I'm not adding to Lemonade now. It's not that it's probably going to be higher in like 4 or 5 years, but I think there's better opportunity in the market to be able to appreciate your money on other than Lemonade, appreciate my money on Lemonade. So therefore I'm not buying it more. In fact, I think I've trimmed it back down when it was like around $75. So, I'm going to continue holding on to that one and probably look to trim it the higher it goes, because I think the alpha is probably a better place than other places. All right. So last thing I was going to talk about is cybersecurity, and then we're going to close this one out. George Kurtz, the CEO of CrowdStrike, had a little bit of an interview. Hold on. I'm going to open it up over here.
Welcome back.
All right. So it was a CNBC interview, but I believe he's also at the World Economic Forum. But let me just make sure I'm sharing the right screen here, not the window. Here we go.
To Money Movers, take a look at shares of CrowdStrike, down nearly 4% year to date, trying to avoid the first 3-month losing streak since 2022. It's been a big winner over the last few years. I got a chance to sit down with CrowdStrike CEO George Kurtz here at Davos earlier this week, where we talked AI, cybersecurity, and geopolitics. But we started with the company's newly announced regional cloud deals. Listen. So you actually have some news that you're coming out with today around your business. What is it?
So we announced a sovereign cloud for both Saudi, UAE, and India. And essentially, sovereign cloud is really meeting customers where they want to have their own data housed, locally in country, and it's just another way for us to provide what our customers are looking for.
Is that something that doesn't already happen from these governments?
Well, it's certain, each country has certain requirements for where their data resides. So we want to make sure we meet them where they have their requirements. And obviously we operate worldwide, and it's just further expansion of our geographic footprint in those areas.
So it's a big source of growth for you.
Absolutely. Yeah. I mean, if you look at Saudi as an example, UAE, certainly India, these are all massive drivers of growth for CrowdStrike.
Because when we would see NVIDIA, for instance, strike a sovereign AI deal,
right.
It would be
it's similar
good
to that.
business for them.
It's similar to that.
It's like that, but they're doing it.
It opens
cloud.
up more TAM opportunity for us.
Yeah, a total addressable market.
Yes.
That is. So I was going to say, what's the competitive space for this, and how big is the market?
Well, I think you have to go back to security in general. The market's huge, and of course it's competitive, and where you operate is going to be just one element of how you deliver what the customer needs in stopping breaches. The broader dynamics is going to be around AI and protecting AI, and a big part of data sovereignty is having data that the things that can be within the country. So given the nature of sovereign AI, we want to be able to protect all those workloads wherever they reside.
How much of your business is being changed by AI, accelerated in terms of demand?
It's absolutely changing technology in general, and certainly security. And when you think about what organizations are trying to do, and I'm sure you interviewed many CEOs today, it's about AI. It's about how AI can transform their business and how they can do things better for their own customers at better operating costs and really better outcomes. And in order to enable AI, you have to have security.
Right. So there obviously is a lot of alpha when it comes to cybersecurity. It's becoming increasingly important nowadays because the more data you have floating out there, on top of that, the more data that's being moved from point A to point B, whether it's just next door, whether it's to your computer across the room, or whether it's across the entire world, which you're seeing a lot of, especially with inference, is that it needs to be secured, whether that is security from a static endpoint, meaning that securing a server, to security in transit, which I believe is where Rubrik comes in. And you have a lot of these cybersecurity companies over here trading at pretty attractive valuations. So if I pull up my watch list over here for cybersecurity, I got my cybersecurity bucket here. CrowdStrike is obviously the best of the best when it comes to cybersecurity, and definitely not a cheap stock, over $100 billion in market cap. Definitely not a cheap stock. And it's trading very expensive, in my opinion. Clearly, though, it looks like you're finding support here in the 200-day moving average, so it might provide like a little bit of upside here. But CrowdStrike was like a really good buy during that outage down here in the low 200s, and a very good buy back in 2023 when it was like below $200. And then went in that massive rally. I've sold my entire CrowdStrike position, I think around here, and then of course it went back up, and then it felt good and it went back up. So right now it's trading above where I sold, and it is what it is, but I ended up rotating a lot of that money into Rubrik, right? So May 2025 in Rubrik, over here, no, it was 2024 it came in. So I was allocating more to Rubrik around here, especially during the outage. So let's see here. If I could actually recall, I think I had a swing position in CrowdStrike during the April outage, and I started selling it when I was up here. Yeah, I think I remember that's what happened. But anyways, that's not important. The important part is that you have Rubrik, which is more in the data security realm that I was just talking about, which George Kurtz was actually talking about too. You have LLMs out there with a lot of inference queries that are running around left and right, and that data needs to be secured because people are not asking the chatbot what's 1 + 1 or what's 2 + 2. Like, these are applications that are sending very important PII data, personal identified information. So addresses, phone numbers, names, and social security numbers, and so on. That needs to be secured, right? And not just from, like I said, not just from a static perspective, which is like installing an antivirus in your computer like it used to be in the past, but more in the data perspective, right? Data in flight. And there's a lot of data in flight that's going to be happening every single year. And it's going to continue growing more and more on a massive scale. What Rubrik does is that it's able to secure the messages that are coming from these AI agents. And on top of that, they do secure the backup data as well. So in case you have a massive outage, Rubrik is able to bring back your system online using a backup that was taken previously, but it scans those backups that are taken so that when it comes back online, you don't have an already infected application that comes online from a previous backup. There's a lot more to talk about when it comes to Rubrik, but I mean, like I mentioned before, the chart does not look good at Rubrik at all. But for me, if I never had a position in Rubrik, I'd probably start building it. But like, as far as like calling the bottom on it, it's very difficult to call the bottom of this thing, because you could have thought the bottom was after the earnings, and then look what happened. We're trading below it, right? So you could be writing a thesis, but you don't have to go hard on it, or the market just doesn't agree with it, right? So CrowdStrike is obviously a very good company, but like, why isn't it trading all-time highs? Because the market is just not about software right now. Software is just not what the market's in favor in. Oh, look at that, the market just closed. Software has been on a massive downtrend for a long period of time, and what's been on a massive uptrend? Semiconductors, right? So that's where the market is at right now. It's going to make its pivot at some point, but that day is just not today, unfortunately. So anyways, guys, thanks for coming on here. Really appreciate you. Again, if you're on the Twitter, go to the Wolf_Financial YouTube page. Link is right there. Like and subscribe to the video. Really appreciate you guys. And